The move by the Reserve Bank of Australia follows similar action from central banks in China, Canada, Singapore, Korea, and India. A rising Australian dollar had also been cause of concern. The currency started to fall against the US dollar on the RBS announcement. The RBS move also follows worrying official trade numbers released on Tuesday, which showed the country's trade deficit had missed expectations. Australia's central bank had been under pressure to cut its lending rates further this year, particularly amid worrying iron ore prices, which recently fell to decade lows, together with the recent strengthening of the local currency.
There's panic in the markets, there's panic around the world about what's happening with currencies. Too many people are experiencing negative terms of trade effects, and an awful lot of countries are weak in terms of the outlook for their exports as a direct result of all these interest rate policies, because they shrink the dollar size of the global economy when exchange rates fall. And that means that everybody else is now trying to do exactly the same thing so that their exchange rates don't fall relative to places like the European Union.
Iron ore is Australia's most valuable export, and the plummeting prices attributed to supply glut and waning demand from China, a key buyer of the product, have been hurting miners' profits as well as government tax revenue. Analysts said the RBS move to cut its lending rates would help further lower the Australian dollar, which would in turn help commodity producers exporting products priced in US dollars. In March, Australia said its economy grew 2.5% in the fourth quarter of 2014 from a year earlier, making it its lowest pace of annual growth last year. The economy grew 0.5% in the October to December period from the last quarter, when quarterly growth was 0.4%. Kenneth Bwire, WBS Business.